Good morning, everybody. This is your S&P 500 setups for today. So, flag break or range forming. Could actually be a megaphone forming as well. So, let's just go through quickly those scenarios. On the 8th hour, so there is the flag. From an 8th hour perspective, it's not a decent setup. But if you drill down through time frames, you're going to see 3 hour has a bit of a better structure. It's only 4 touches. I count the fractals as the touches, and those are only 4 there. So is that a flag break? Then the next option is a megaphone. Megaphone is also a consolidation pattern, which is pretty much what we're doing at the moment. There's your megaphone. Or alternatively, are we just ranging? I'm going to delete the diagonals. They tend to confuse us a bit. So yeah, difficult to ascertain still. As I said yesterday, V reversals are rare. So this was a massive buying frenzy here on the pin bar, or profit taking. And then we tried to close a gap, and we've sort of dropped again yesterday. So I'm not so sure either way at the moment. So pretty much still the same. And the volatility you would expect to continue. There's so much chaos happening in the markets at the moment that my gut is just to sit tight and wait. Now, the flag setup, you can see here on the 3 hour, the flag setup, there is fractal to the downside, which we've got a break. So that fractal's broken, and then we've gapped up, come back up to test something, and I think that level is not what we're looking for at the moment. This upper level at the moment, which was the gap, which is closed on the 3 hour, still open on the 8 hour. That is 53.14 or 53.15. That is obviously the line in the sand. And as we said yesterday, we needed to get back above that area, which was the previous day's high. We need to get above it, break above it, come back, test, and then get going. That did not materialize yesterday. And you can see the gap is closed on the hour as well. So it's only open on the 8 hour, but it is open. And we've now left another gap to the upside. So, sorry, to the downside. Now, key thing here, this is, in my opinion, not a flag at the moment. It is definitely a range. That range has a deeper bottom, which is pretty much at 51.68. We just pop across to the weekly. You'll see there are weekly tails here, but nothing else. The market is going to try and find an area where it makes sense for the buyers to step back in and get going again. So we've got nothing on the weekly. We've broken through the only weekly level, which we've now pushed up to 53.15, but it was 5300. So that's the only weekly level that we have in play at the moment. We do have a weekly, well, 2 weekly, 3 weekly gaps to the downside. So there's a little one there, biggish one here, another one here. So there's quite a few weekly gaps to the downside. I think, at the moment, we are definitely trying to find an area where we are going to create the next level from which to launch an upward move. The big question is, where is it going to be? Hopefully not down here, because that is the next logical level. So this is 48.15. So that would erase the whole year's gains in pretty much a month. So I don't think it's going to happen, but stranger things have happened in the past. But anyway, let's just get back to what we want to do today. Now, above, below, above, looked like we're getting support for a break, and then below the moving averages. So for as long as we're below this 150, we are short. We are in a bear trend, but You can't have is massive moves up in a day and then massive moves down. That is just extreme volatility. So it's a 2% move up in the market to a 3% move down in the market. So that's a 5% swing in one day. That's back to COVID type swings. Never easy to trade. So 15-minute, as I said yesterday, we need to keep above the moving averages for an opportunity to the upside. Did not materialize, sort of just plummeted. And again, there was no break and retest of structure. I suppose we could argue with hindsight that there was the break, but that's like a range bar confusion, then a rejection. Not something I would have picked up there. That was nothing. You see nothing there. We didn't even break and retest the structure. We're out on the 15 minutes, so you would expect some kind of structure anyway. So I think for me today, I'm treating this as a range, but it is a massive range. So obviously there is opportunity to trade in this range. I mean, with a 3% swing in the range, is definitely opportunity to trade. But you need to be on the lower time frames. When I say lower time frames, you're probably on the 5 or 6 minute chart. And unfortunately, that's not something I have time to do in the day. So you can see from a 6 minute perspective, just on the market open, there was definitely an opportunity here. There's my structure there. Didn't quite get it, but on the lower time frames, that's kind of what happens, and you rather take the break of the structure, which was there. So even that's a 260 point stop loss for 200. So 1-to-1 gain, 200 point risk, 200 point gain. And if you just take it from the 6 minutes here, you can see that was the upper level drop. There's a signal right there, which is well worth 100 point risk, because you would have quickly gained a 3-to-1 trade. And then if you'd held that even longer, a 500 point trade. But you need to be on the 5-6 minute charts to pick those moves up at the moment. And unfortunately, I don't have that time. And I know a lot of you guys don't have that time as well. So what do we do? I think for me, sit back, wait. The rule still stays the same. We are waiting for a break, the top side of this range, and that's going to be 53.15. That's what we're looking for. We want to break, we want to retest, we want crossover of the moving averages in the hour. That should give us the trend we're looking for. At this stage, with crossing above and below the moving averages, we are completely confused. There's no diversions, there's no structure on the higher time frames at all. Just want to check the daily while we're here as well, and you can see tails to the downside, tails to the upside, and we're just hovering here on the 150 EMA. Oscillators group to the downside. We do have diversions from, no we don't, sorry, we don't have diversions. We did have diversions here, but we don't have that anymore. So there's no diversions, there's no structure, there's nothing at the moment. We need to see what is going to happen. Is it either going to plummet further, and each one of these daily swing highs here or swing lows is going to hold up price up until that point. So this is 49.50 basically. After that, we have a weekly high, which is just below that at 48.15. So that's kind of the next logical bit of structure. But when it's volatile like this, any one of these tails up until this level of 49.50 could hold up price. So we're going to have to wait and see where the bottom is. And if you follow the VIX, and the VIX is an instrument which people trade, which measures volatility. That thing has been swinging wildly. It has never swung like it swung this week in its history. Never ever in its history has it swung like it has. So that's just an indication of how volatile this is at the moment. So I'm still looking for the opportunity to scale in on long-term longs on portfolios, and I'm also looking to see where the bottom is on the trading side so that we can actually just jump in and make some short-term revenue. But for as long as we're swinging like this, best advice I can give you is stay out of it. Don't try second guess it, because second guessing it, just getting it wrong, you're going to be 400 points underwater in the matter of minutes. And that's enough to make your eyes water. Anyway, I'm sitting on the sides. We'll wait for much better structure before we get involved in this and just watch the fun and games from a distance. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.